Hi there, welcome back to ET Now. You're watching Market Café with me, Kanishka Sarkar, and Sheshad Dwaryu, a show where we're discussing all the market cues that we need to watch out for in today's trading session. And to discuss this further, we are now joined by Sunil Subramaniam, who's the market expert. Hi Sunil sir, good morning. Thank you so much for joining us this morning. Now, Abhishek was just talking about how on the technical level, we have already seen 5 weeks of lows, and the 6th week could be a better one. So do you think that could play out? How is it looking to you? What is your expectations? How could we end the market, end the week, today?
Well, I think first of all, I'm not a technical person, but then if you look at the way the market reacted to the Trump announcement, it clearly indicates two things. That from an international investor perspective, it seems to be oversold. So they have been taking the negative news on tariffs and selling the whole month today. And yesterday they continued to sell. But what's happened is that DIIs stepped in strongly to buy. I think there's a lot of cash with DIIs. Mutual fund cash balance are still around 5%. So I think that this is an opportunity seen by the DIIs to buy in and support the market yesterday, because the tariff announcements, end of the day, when you analyze it, right now, less than 5% of India's exports are likely to be affected by this 50% tariff route as things stand. So I think DIIs took a lot of comfort from that. And the fact that this may actually push the Indian government to push through productivity reforms as well as do some export-related initiatives to support the labor-oriented segments to counter the tariff. So I think DII buying will continue to sustain the market today also. That's why I feel that the outlook for the market today and some of the results which have come in post-market hours have also been positive, indicates strong consumption numbers, for example, from Titan, which augurs well for the domestic economy.
Okay, so DIIs will continue to support the Indian market. That's the word coming in. Mr. Subramaniam, good morning. Ashesha this side. Since you spoke about earnings, 44 out of 50 Nifty companies have already reported their numbers. And it's not as negative as expected, right? It's okay. Nothing major, positive or negative as such. How do you expect the market to react to earnings momentum going forward then? And what is your first thoughts on the kind of earnings season we have seen so far?
So I think some of those sectors have reported very good earnings. In fact, if you see pharma earnings have been good, auto, some of the numbers have been good, banks by and large have been okay. So I would say that the earnings season, what you correctly pointed out was that there was a bit of a pessimism around the earnings, given the initial numbers that came in, right? I think that has belied itself. The earnings season has turned out to be fairly decent. And I think a high single-digit growth for the Nifty with a double-digit growth for the broader market looks like on play. Second aspect is that on a Q-on-Q basis, there is some improvement. And probably the other thing which is coming through from the guidance is that this is more or less a crossover quarter, in the sense that all the government fiscal policy actions as well as RBI's actions are going through. And that RBI policy, if you mentioned, about 77 basis points of the 100 basis points cut has been transmitted. So I think you'll begin to see the effect of that. And so the next quarter's expectations, with the festival season coming in a bit ahead of time. I think Diwali is around 23rd October. So which means that we are going to see a good pickup in production to stock up the dealers in these 2 months. And then in the festival season, you're going to see the impact of the CRR cut on the banks, which starts on September 5th, plus the rate cut impact flowing through and the giveaway in the taxes in the budget. All of that will probably make this a good festival season, is the expectation in the corporate sector. So if that plays out, then I think the market is trying to price in that. And that's why you've seen that the markets have by and large reacted decently to the earnings season so far, because it's the DIIs who've been driving the market this month. So they naturally will be looking at key sectors and stocks. And so this is more of a sector and stock picking market. So given the whole tariff scenario, naturally external sectors have so far been out of the panel. So IT has been an underperformer, pharma to some extent, realty had been an underperformer. But now you'll see that yesterday they started, IT buying has started again. So now that the news is out in the open domain, right, the uncertainty is what hurts the market. And I think that removal of uncertainty in a way, so you saw some buying coming in from DIIs because of that. So to me, this earnings season represents a crucial handover period from a slowdown in the GDP we saw in the last quarter of last year down to this year's. Again, RBI retaining our growth at around 6.5% is a very positive sign in terms of the fact that the economy, domestic economy, seems to be on a good guardrail.
on the earning season so far. Mr. Subramaniam, thank you so much for taking your time out and joining us here today and helping us understand what the market setup is looking like for today's trade. Thanks so much for joining us.